and welcome back to Tax Talk with Compass. My name is Brittany Drish, and joining me here today is Mike Piper, our senior accountant.
Hi, everybody. Glad to be back.
Yeah, so today we're going to be going over a big change that's coming in 2026 that's going to be able to better help families save for their child's future. So the Trump accounts, which were created under the One Big Beautiful Bill Act, help families save for the future. We're going to go over how you can open these accounts, who can fund these accounts, and then when families are ready to take the funds, how that process kind of works. So Mike, do you mind kind of going over the basics?
Yes. Think of a Trump account as a special savings account for your child's future. It works a little like a retirement account and a college savings plan combined. Starting in July of 2026, families can open these accounts for kids born after December 31st, 2024 and before January 1st, 2029. But here's the cool part. The government will put in $1,000 to start the account. There are no income limits, but the child must be a U.S. citizen and have a social security number.
Okay, so what about anyone that's born before January of 2025?
Good question. You can still open a Trump account for any American child under 18, but those accounts won't get that $1,000 starter deposit.
Okay, and then who can fund these accounts?
Parents, grandparents, and other family members can add up to $5,000 per year until the child turns 18. That limit will go up a little each year after 2027. Employers can also contribute up to $2,500 tax-free, but that amount counts towards that $5,000 yearly cap. And unlike retirement accounts, you don't have to have a job to contribute.
Okay, and then how do parents go about opening these accounts for their kids?
For kids born after January 1st, 2025, the government plans to automatically open and fund these accounts. For kids born before that date, we're waiting on details from the Treasury Department, but most likely there will be an official website or you'll be able to go to a participating bank once the program launches.
That makes sense. And then when families are ready to take the funds from these accounts, how does that process work?
You can't use the money until the child before age 18. Withdrawals are tax-free if you use the money for certain things such as education, college, or a trade school, your first home, starting a business, and retirement. But if you use the money for something else, you'll pay a penalty on the income and earnings. That's about it.
Yeah, so I guess an example would be, if your child takes the funds out to go on a vacation, that's not going to be qualified, right?
Correct.
So big life purchases, a home, education, starting their own business then, right?
Yes, yes, and even small regular deposits can add up over 18 years. But one thing I'd like to say, the rule could change because this is just a pilot program.
Yeah. Thank you so much for your insight, Mike, and thank you for watching. We'll see you next time on Tax Talk with Compass.